Good morning, students. Welcome you all once again on another asset-based standard, which is on agriculture. I am CA Dr. Alok Garg, and I will take you through with Ind AS 41 today. In one lecture, we will finish this standard because this is a very small standard. Ind AS 41 agriculture. So, friends, if I talk about this particular standard, this is again an asset-based standard which talks about biological asset. So far, you have learned and you have understood property, plant and equipment, which is Ind AS 16, intangible asset, which is Ind AS 38. You have also must be gone through with inventory, which is Ind AS 2. Ind AS 23, borrowing cost, which talks about what borrowing cost needs to be capitalized to a particular asset. And if I talk about Indian economy, so Indian economy is an agriculturist economy, agriculture based economy. But there was no any standard in our old accounting standard. There was no any guidance which talks about if there is an agriculture related activity, if there is an agriculture related activity, agriculture related output, okay, then how this output has to be recognized, has to be measured. There is no accounting guidance per se from the perspective of agriculture. For example, if cow has given birth to a calf, then how this biological asset has to be accounted for. There is no any guidance so far in our old accounting standard. But if I talk about globally, there was IAS 41, which talks about the agriculture related guidance, which talks about if cow has given birth to a calf, then how this calf has to be accounted for in the books of an owner of a cow, right? So this agriculture related guidance IAS 41 was talking about the accounting which is related to animal as well as plant. Okay, so this talks about animal as well as plant. So likewise, when in India we have converged IFRS in 2015, okay, so we have also converged IAS 41 into Ind AS 41. And after convergence of IFRS into India, after adoption of Ind AS into India, we do have a guidance in terms of agriculture. We do have guidance in terms of agriculture in Ind AS 41. So now under Indian accounting standard, we have a guidance that if cow has given birth to a calf, how this calf has to be accounted for, how these plants have to be accounted for, how this agriculture related activity needs to be recognized, needs to be measured, what all sort of disclosures are required in the books of accounts. For example, if you see the balance sheet of Dhanushri Tea and Industries Limited, okay, so you will find the disclosure related to Ind AS 41 agriculture standard. If you see the balance sheet of ITC Limited, you will find a biological asset in the balance sheet of ITC. So they are also applying Ind AS 41. Okay. If you see the balance sheet of let's say what can I say, Amul Dairy, okay, so Amul, which is into milk and other things, Mother Dairy, so you will find this application of Ind AS 41 on those companies, right? So in global scenario, in IAS scenario, IFRS scenario, we do have a guidance, and that is why in Ind AS 41, in Ind AS we have a guidance for agriculture in terms of Ind AS 41. But when I talk about accounting standard, we don't have any guidance in accounting standard, right? So this Ind AS 41 talks about two things. One is animal as well as plant, right? Animal as well as plant. I hope my voice is clear to everyone. I hope I'm audible. Yeah. So friends, as far as agenda is concerned, today we are going to talk about what is the objective and scope of Ind AS 41, right? Then we will talk about some sort of definitions like what is meant by biological asset, what is meant by bearer plants, what is meant by agricultural activity, what is meant by harvest, what is meant by agriculture produce. Okay, so we will talk about all this definition from the theoretical aspect. Then we will talk about the recognition, that how this agriculture related output, how this agriculture related outcome needs to be recognized. Okay, so we'll talk about the recognition condition because it is again an asset based standard. So we will be talking about how this biological asset has to be recognized in the books of accounts, right, as per Ind AS 41. Then we will talk about, okay, you are okay to recognize, but at what value? So of course, this value will be derived by this measurement criteria, right? We will be discussing upon. Then we'll talk about gains and losses. That when you are recognizing, when you are measuring your agriculture related assets, which is your biological assets, then how this gains and losses will come into play, right? Then we'll also talk about government grants. So let me tell you, there is a specific standard on government grant, which is Ind AS 20, which talks about accounting for government grants and disclosure of government assistance. But in this case, we will only be talking about government grants related to agricultural activity. So my dear students, if I talk about government grants, so government grants has been covered under two standards. One, there is a specific standard on government grant, which is Ind AS 20. Second, Ind AS 41, and in Ind AS 41, only government grant related to agricultural activity needs to be covered. Okay, so government grant related to agricultural activity. Okay, and all other government grant has to be covered under Ind AS 20. Only government grant related to agricultural activity has to be covered here. Then of course a theoretical part, disclosure will be there. Of course we will not talk about disclosure, but yes, in my PowerPoint presentation, disclosures are also covered. So right, when we'll be talking about objective and scope, we need to understand what is included in the purview of this standard, what is not included in the purview of this standard. We'll talk about some important definitions. We'll talk about the recognition criteria, because it is an accounting standard, and accounting standard deals with recognition, measurement, presentation, disclosure. So we will be talking about the recognition, we'll be talking about the measurement criteria, we will be talking about gains and losses, and we'll talk about government grant stuff as well in this particular standard. Yeah, I hope agenda is clear. I hope agenda is clear to everyone. Yeah. So coming to the objective, what is the objective of Ind AS 41 agriculture? So guys, just from your plain understanding, the standard is Ind AS 41 agriculture, right? So what could be the expectation? What could be the objective of this particular standard? What all sort of issues this standard is clarifying? So what do you think? If it is an agriculture based standard, of course, it will be talking about agricultural activity. It will be talking about how to recognize agriculture related assets. Okay. It must be talking about how this agriculture related assets needs to be measured. It must be talking about the government grant. Okay. It must be talking about the gains and losses, what we have covered in the agenda. Okay. So let's discuss the objective. The objective of this standard is to prescribe the accounting treatment and disclosures for agricultural activity. What is the objective? It prescribes the accounting treatment. And when I say accounting treatment, so accounting treatment means your recognition, measurement, presentation, disclosures. Okay. So it talks about accounting treatment and disclosures of agricultural activity, right? And it addresses the following key critical issues. What could be the key critical issues? Prior to Ind AS 41, in India, there was no accounting guidance related to agriculture, right? If cow is giving birth to a calf, then that calf was never accounted for. Or if it was accounted for, it was accounted for at a nominal value, for example, say rupee 1, okay? Only for identifying that asset in the balance sheet, okay? So the key critical issues which has been addressed by this particular standard is how to recognize that biological assets or agricultural produce. Okay. So what could be the asset related to agricultural activity? One is biological asset. The second one is agricultural produce. For example, cow. Cow is a biological asset, right? And what is the definition of biological asset? Biological asset is a living animal or plant. Living animal. Mind my word, living animal. I have not said animal. I have said living animal. So biological asset is a living animal or plant. Okay. So this standard is talking about if there is a biological asset, then how this, when this biological asset should be recognized in the balance sheet, when this biological asset should be recognized in the books of accounts. So this standard is talking about the biological asset recognition as well as agriculture produce. Okay. For example, there is a mango tree, and mango, every year mango tree is producing let's say 100 kgs of mango. Okay, so at what value this 100 kg of mangoes has to be recognized, or when this 100 kg of mangoes will be recognized, whether it will be recognized or it will not be recognized. So these all issues has been addressed by this particular standard. In our earlier regime, probably if on a tree there are mangoes, okay, for example 100 kg mangoes are there, so those mangoes were not recognized in the books of accounts. When the companies were selling those mangoes, whatever income which is deriving from selling of those mangoes needs to be recognized. But if the entity is plucking those mangoes and putting into the cold storage, at that point of time the entity was not recognizing the value of those mangoes. But in Ind AS 41, in this agriculture related standard, this standard talks about when should a biological asset, when should a biological asset or agriculture produce be recognized on the balance sheet, right? When I say biological asset, it is living animal or plant. For example, mango tree is a biological asset. When I say agriculture produce, it means the produce from the biological asset. So mangoes are the agricultural produce. Cow is a biological asset. Milk from cow is an agricultural produce. Okay, milk from cow is an agricultural produce. tea tree, coffee tree are biological asset. Tea leaves and coffee leaves are agricultural produce. Sugarcane is a biological asset. Harvested cane, okay, so when you plug this sugarcane, it will become your agricultural produce. Okay. Rubber tree is a biological asset. Latex from the rubber, that rubber milk is an agricultural produce, right? So have you understand the difference between a biological asset and agricultural produce? Have you understand the difference between that? Yeah, is it clear to you guys? So this standard talks about when should a biological asset or agriculture produce be recognized on the balance sheet. So this standard talks about the recognition. It solves the issues of recognition, right? At what value? Okay, you said that yes, sir, we will recognize the biological asset or agriculture produce in the books of account. But at what value? For recording such things in the books of accounts, you need a value. So this standard also addresses at what value such biological asset or agriculture produce be measured. So this standard also solves the problem of measurement. Okay, measurement, right? How should the difference in the value of a recognized biological asset or agriculture produce be accounted for between two different reporting dates? So this standard also talks about subsequent measurement. Okay, for example, today, or let's say on 31st March 22, the value of a cow is, let's say, 100 rupees. Tomorrow, when I say 31st March 23, the value of cow becomes 150. So how this 50 rupees of difference has to be recognized, has to be measured, has to be accounted for. So this standard also talks about subsequent measurement. This standard also talks about subsequent gains and losses, right? And of course, last one, this standard also provides the key disclosures, that what could be the key disclosures related to this particular Ind AS 41 agriculture related standard. So friends, so far we have understood that this standard talks about the accounting treatment and disclosure of agricultural activity. This standard talks about when two assets needs to be recognized. When I say two assets, one is biological asset and the second one is output from the biological asset, right? So please try to understand biological asset, biological asset, biological asset. What is my biological asset? It is living animal or plant. It is living animal or plant, right? But when I say let's say agricultural produce, okay, so what is my agriculture produce? It is output, from biological asset, like milk is an output from cow is a biological asset, milk is an agriculture produce. Mango tree is a biological asset, it is a living plant, it is living animal or plant. So mango tree is a biological asset, but mangoes are the output from the biological asset, which is meant by agricultural produce. Okay, clear? So we have understood the objective part. Let's move to the scope part. What is covered under this particular standard? First of all, you need to understand, under this particular standard, this standard shall be applied. This standard shall be applied for the following when they relates to agricultural activity. When they relates to agricultural activity. Please remember, I have told you that this standard is applicable for biological asset. This standard is applicable on agricultural produce. But sir, you have told us that while teaching Ind AS 16, bearer plant is also part of Ind AS 16. Okay, I'll come to that, right? So this standard is applicable on biological asset. This standard is applicable on agricultural produce. Okay, this standard is applicable on biological asset and agricultural produce. I have told you. But sir, whether on all biological asset this standard is applicable? Whether on all biological asset this standard is applicable? For example, you have told that biological asset is living animal or plant. Have you seen the circus? Have you seen any circus? In circus, that event management company employs some animals, right? The event management company purchases some animals and they use those animals for entertaining the audience, right? Is it an agricultural activity? Whether the goat or the monkey who is riding the bicycle, who is riding the rickshaw, or a lion who is just crossing the ring of fire, whether it is an agricultural activity. That lion, goat, monkey, these are the animals. These are the biological asset. But what they were doing, is it an agricultural activity? Yeah. In a circus, if the animals are entertaining the audience, is it an agricultural activity? Answer is no. You're right, Sairam. It is not an agricultural activity. So those animals, whether those animals, if the event management company has purchased those animals, whether that company will apply Ind AS 41 for accounting for those animals? Yeah. Answer is no. That company will not apply Ind AS 41. Why? Because Ind AS 41 is not applicable on those animals. Ind AS 41 is only applicable to the animals which are related to the agricultural activity, right? You have seen the marriages, that bride, so not bride, groom. Okay, so groom comes on a horse or mare, right? So if the event management company has purchased some horse or mare, okay, for the purpose of, renting them out into a marriages, okay. So whether it is an agricultural activity, if the horse or mare is taking a groom to the venue, to the marriage venue, is it an agricultural activity? That horse or mare is an biological asset, is a biological asset, right? It is a living animal. But what that horse or mare is doing, is it an agricultural activity? Answer is no. So if this event management company has purchased these animals for the purpose of commercial objective, when I say commercial objective, of course, for the purpose of entertaining the audience, for the purpose of marriages, of course, it is not an agricultural activity, and hence on these kind of biological assets, this Ind AS 41 is not applicable, right? So Ind AS 41 is applicable to biological assets, agricultural produce at the point of harvest. It is very important. Agricultural produce at the point of harvest, and government grant only when it is related to the agricultural activity. Okay, so it is related to biological asset, it is related to agricultural produce, and it is related to government grant only when it is related to agricultural activity, right? Agricultural activity. I hope it is clear to everyone so far. In the examination, even if, for example, if it will be your GFRS paper, elective paper, or it will be your financial reporting paper, okay, if it has been written that the company has purchased, let's say, 4 animals, 2 animals are used for the commercial purposes. No, I mean to say, when I say commercial purposes, for example, for the purpose of entertaining the audience, and 2 animals are used for the agricultural activity, okay, So you need to understand that on the two animals which are for the purpose of entertaining the audience, Ind AS 41 rules will not be applicable. Okay. And this is a special standard. I would say it as a special standard. Why? Because the recognition and measurement criteria is different, right? The measurement criteria is different from all other asset based standards. So you need to understand that, okay, on these two kind of animals, 41 is not applicable. On these two animals which are engaged in the agricultural activity, 41 is applicable. Okay. So if you not remember, if you don't remember this scope para, so you will you will incur a mistake at that point of time. So you need to understand that this standard is only applicable to biological asset, agriculture produce, and government grant when it is related to agricultural activity, right? When it is related to agricultural activity. And when I say agriculture produce at the point of harvest, at the point of harvest, what is meant by at the point of harvest? At the point of harvest means at the point of detachment. For example, this is a mango tree. Okay, this is a mango tree. There are a lot of mangoes which is lying on this mango tree. Okay, you are at 31st March 22, 31st March 22, and around 100 kg of mangoes are lying on this mango tree, which is not ready to harvest, which is not ready to harvest, right? So it will take around another 1 month for harvesting these mangoes from the mango tree. Now the point arises, the mangoes which are lying on this mango tree, do I need to recognize or measure these mangoes every day? Answer is no. When you are harvesting these mangoes at the point of harvest, when these mangoes are ready to harvest, okay, for example, today I need to plug, let's say 100 kgs of mangoes. So today I will recognize, today I will measure these agricultural produce. Okay, if the agricultural produce is lying on the biological asset, I will not measure. Okay, so for example, milk, when I harvest milk from the cow, when I detach milk from the cow, only at that point of time I will recognize and measure milk, which is an agricultural produce. If the milk is inside the cow, okay, I will not recognize, I will not measure the milk which is inside the cow. Okay, whenever I am harvesting this milk out of cow, only at that point of time this milk is going to be recognized and measured. Sir, how this is going to be recognized, how this is going to be measured, we will discuss. But you need to understand that this standard is only applicable when it is related to agricultural activity, right? And on which item this standard is applicable? On biological asset, this standard is applicable. On agricultural produce, this standard is applicable. But sir, at what point of time? Agricultural produce at the point of harvest, at the point of plugging, at the point of detachment, at the point of removing from the biological asset. Okay? And government grant when it is related to agricultural activity. I hope it is clear to everyone so far. I hope so. Yes, Sairam, in this standard, there is a specific definition of agricultural activity which is given, and I'll discuss that, right? Coming to, so we have discussed on which item this standard is applicable. Now we need to discuss on which item this standard is not applicable. Ind AS 41 does not applies to. So we have discussed Ind AS 41 applies to biological asset, agriculture produce at the point of harvest, and government grant when it is related to agricultural activity. But it does not apply to, it does not apply to land related to agricultural activity. Okay. So in the examination, it was given that the company has acquired a land for rupees 20 crores for the purpose of agricultural activity, right? So don't get confused. Land will never come under the standard of Ind AS 41. So Ind AS 41 rules will not be applicable for land. Okay, even though it is related to agricultural activity. Okay, so land related to agricultural activity is outside the scope of Ind AS 41. It is accounted for as per Ind AS 16 or Ind AS 40 investment property, right? Bearer plant. Okay. Do you remember? I have told you the concept of a bearer plant in Ind AS 16. So even though the mango tree is related to agricultural activity, what is meant by bearer plant? Bearer plant means those plants which will provide agricultural produce for more than 1 year. For example, mango tree. Mango tree will provide mango for 20 years, 30 years, 40 years, right? For example, tea tree, coffee tree, grape wine, sugar cane. So these will provide the agricultural produce for more than 1 year. Okay. So if it is providing an agricultural produce for more than 1 year, this kind of plant is called as a bearer plant. Okay. And bearer plant has to be accounted for as per Ind AS 16 property, plant and equipment. But if the plant not provide the agricultural produce for more than 1 year, for example, tomato tree, for example, potato, tomato, okay, all these vegetable related trees, okay, so these rice, maize, okay, wheat, so all these kind of crops, all these kind of plants is known as a non-bearer plant, and it will be covered under Ind AS 41. Bearer plant will not be covered under Ind AS 41. So let me talk about the biological asset. First of all, biological asset. Okay, biological asset. What is a biological asset? So biological asset is an animal. When I say animal, it is living animal. It is living animal or plant. Okay. So plant could be of two types. One is bearer plant, non-bearer plant, non-bearer plant. What is meant by bearer plant? Bearer plant are those plants which provide, bearer plants are those plants which provide agriculture produce for more than 1 year, okay. Okay. And non-bearer plants, like, they provide agriculture produce within a year, less than a year. For example, seasonal. These are like seasonal plant, okay, within a year, right? So bearer plant has to be accounted for as per Ind AS 16. And this non-bearer plant has to be accounted for as per Ind AS 41, right? There is no concept of bearer animal. If there are living animal and if it is related to agricultural activity, it will be covered under Ind AS 41. If it is not related to agricultural activity, it will not be covered under Ind AS 41. Probably it will be covered under Ind AS 16 or Ind AS, or it will be covered under Ind AS 16, or could be other standard. Okay. I hope this concept is clear to everyone. Yeah. I hope this concept is clear to everyone. Yeah. So it is not applicable to land, it is not applicable to bearer plant, and it is also not applicable to government grants related to bearer plant. If government has given a grant to produce mango trees are the bearer plant. So this government grant is also not covered under Ind AS 41. It will be covered under Ind AS 20. Okay. So if the standard is not applicable on the bearer plant, then how this standard can be applicable to government grants related to bearer plant? As simple as that. Intangible asset related to agricultural activity. For example, there are big farmers who are also applying some technology, some software, some licenses while producing this agricultural produce, right? So if they are applying some intangible asset which is related, even though which is related to agricultural activity, it will not covered under Ind AS 41. It will be covered under Ind AS 38. Okay. Right of use assets. For example, if a company has taken a land on a lease basis for the purpose of agricultural activity, like when you go to Northeast, you will see big tea farms, big coffee farms, okay. And when you inquire, you will find that these are on a lease basis. For example, I will take a tea farm on a lease basis. I will grow the tea trees on the tea farms, okay, and I will pay the rent to the landlord for this land, okay. And whatever agriculture produce will be there, it will belongs to me. So just imagine, if the land which has been purchased by the agriculture producer, right, if the land is not covered under Ind AS 41, then how lease of land will be covered under Ind AS 41. So you have recently read and understood, you have recently gone through with Ind AS 116 on leases. So if you are taking a land on a lease basis, so of course there is an asset known as a right to use asset. So that right of use asset related to a lease of a land which is related to agricultural activity will also not be covered under Ind AS 41. It will be covered under Ind AS 116, right? Understood? And Ind AS 41 is also not applicable to agriculture produce after harvest. So once you pluck the mango tree, once you pluck the mangoes from the mango tree, okay, so at the point of harvest, Ind AS 41 is applicable. But after harvest, Ind AS 41 is not applicable. After harvest, probably Ind AS 2 or other standard will be applicable. What does it mean? So let me tell you with the help of an example. This is Nestle. Have you heard about Nestle? Yeah, it's a big company. Nestle is a big company, right? Nestle. So Nestle has some mango orchard, right? So Nestle has some mango orchard. This is a mango tree. This is a mango tree. And there are a lot of mangoes on the mango tree. So Nestle has plucked 100 kg of mangoes, 100 kgs of mangoes, right? 100 kg of mangoes on, let's say, 31st March 2022, which is today, right? So at this point of time, when I talk about mango tree is a bearer plant. When I talk about mango tree is a bearer plant. Mango tree is a bearer plant. Mango tree is a bearer plant, right? When I talk about mangoes, mango is an agricultural produce. Agricultural produce. So when I'm harvesting these mangoes, these are 100 kgs of mangoes. So this agriculture produce at the point of harvest, these are 100 kg of mangoes, and on this 100 kg of mangoes, Ind AS 41 is applicable. Mango tree will be covered under Ind AS 16 because it is a bearer plant. And on these mangoes, when I'm harvesting these mangoes, when I'm plugging these mangoes today, which is 31st March, this Ind AS 41 will be applicable, and I need to account for these mangoes as per Ind AS 41. And Ind AS 41 says that the agriculture produce at the point of harvest has to be recognized at fair value less cost to sell. So today, what I'll do today, for example, the fair value of such mango is, the market value of mango is, let's say, 50 rupees per kg, 50 rupees per kg. And there is a cost to sell. If you need to sell a mango, you have to incur a transportation cost. You need to incur some cost if you want to sell these mangoes. So cost to sell is, let's say, 5 rupees per kg. Now tell me, what is the fair value of the mango if it is 50 rupees per kg? 50 multiplied by 100. The total fair value is 5,000. 50 multiplied by 100. The total fair value is 5,000. What is the cost to sell? If 5 rupees is cost to sell per kg, what is my cost to sell? My cost to sell is 500 rupees. My cost to sell is 500 rupees. Okay. So 5,000 minus 500 comes out at 4,500. It comes out at 4,500. So I will recognize mango at the point of harvest at fair value less cost to sell. What is my accounting entry? My accounting entry will be agricultural produce account debit, agricultural produce, which is my mango account debit by 4,500 to other income, because I have not paid anything. Okay, to other income 4,500. And now after picking these mangoes, after plugging these mangoes went to the cold storage. Okay, why? Because Nestle has to manufacture or produce, let's say, jams, pickles, okay, or let's say some other kind of drinks, right, like maza, okay, slice. So Nestle has to produce these items, and they have put these mangoes on the cold storage. So after point of harvest, these mangoes will become an inventory for the Nestle. Okay, at the point of harvest, these mangoes has to be treated as per Ind AS 41, which is fair value less cost to sell, and after that it becomes an inventory, right? So what will be the next accounting entry on 31st March? First accounting entry will be agriculture produce account debit to other income. Okay, the next accounting entry will be when it went to cold storage. The next accounting entry will be inventory account debit. The next accounting entry will be inventory account debit, inventory account debit to agriculture produce account, agriculture produce 4500, and this fair value less cost to sell becomes the opening value of the inventory. Okay, and hence the standard says that agriculture produce after harvest, this standard 41 is not applicable. This standard is applicable to, says that Ind AS 41 is applicable to agriculture produce only up to the point of harvest, only up to the point of harvest, and thereafter Ind AS 2 or other standards shall be applied, right? So this standard is only applicable to agricultural produce up to the point of harvest. We have seen that even in the scope para we have seen that agricultural produce at the point of harvest, right? Is it clear? Yeah. So friends, there are some examples of biological assets, agricultural produce, and products that are result of processing after harvest, right? Clear? Friends, the example of biological asset is like sheep. What is sheep? Sheep is an animal. What is the agriculture produce out of that sheep? Wool. Okay, for a textile company, if they are breeding sheep, right, sheep is a biological asset. Wool is an agriculture produce from the biological asset. And what could be the final output? What could be the inventory? What could be the final output? The final output is yarn, carpet, in case of a textile companies, right? Trees in a timber plantation. Okay, there is a company and a company is planting a tree, right? Why they are planting a tree? Because they have to cut the tree. They have to cut the tree. They have to take the felled tree logs and they need to convert these felled tree logs into the lumber. For example, they are planting a big trees. When these big trees fell down, okay, they have to cut the trees into lumber for purpose of construction of houses or construction of furniture, right? So trees, the live trees in a timber plantation is a biological asset. The felled tree logs, is a agricultural produce. After that, it will become an inventory, right? The felled tree logs is a agricultural produce. So when these felled tree logs will be there, when the wool is taking out from a sheep, it has to be calculated at fair value less cost to sell at the point of harvest. Okay, so after that the same thing will become an inventory, right? This wool will become an inventory, this felled tree logs will become an inventory, and what is the product is a lumber means just cutting down the felled tree logs into a shape for the purpose of construction. Dairy cattle like goat, cow, buffalo, these are the biological assets. What is the agriculture produce? Milk is the agricultural produce. What could be the final outcome from the milk? Cheese, paneer, right? Sweets. This could be the final output. Sugarcane is a biological asset. It is a plant. Sugarcane is a bearer plant also, so it will be covered under Ind AS 16. But the harvested cane is covered under Ind AS 41. It is an agricultural produce, right? Sugar is a final product. Tea bushes, like if you see the tea bushes, so this tea tree or coffee tree survive for 60, 70, 100 years, right? So this is a bearer plant. It will be covered under Ind AS 16. But the picked tree leaves or the picked coffee leaves, these are the agriculture produce, right? And what is the final output? The final output is tea. Grape wines, the grape wines are the bearer plant, but the picked grapes, when for example there is a wine company, the wine company has a grape orchards, right? So all these grape wines will be covered under Ind AS 16 because they are the bearer plant. And when they are plugging the grapes from the grape wines, it will become an agricultural produce. So at the point of harvest, this agricultural produce has to be recognized at fair value less cost to sell, right? And what could be the final output from these grapes? It could be wine, it could be jams, it could be pickles, it could be some drinks. Okay, Tobacco plant. Tobacco plant is again a biological asset. The picked leaves, the picked tobacco leaves is an agriculture produce, and final output could be the tobacco. Rubber tree is again a biological asset. It is a bearer plant. The harvested latex, that harvested rubber milk, is an agriculture produce. And what could be the final output? It could be rubber products, right? I hope you guys have able to understand this thing. Sheena is asking, sir, if there is a lease related to a bearer plant, will it be covered under this Ind AS? No, Sheena. If the bearer plant is not covered under this standard, then the lease related to bearer, I mean to say right of use related to bearer plant will also not be covered here, right? So guys, I hope we have cleared so far what will be covered under Ind AS 41, what will not be covered under Ind AS 41, right? Then coming to the important definition, what is a biological asset? Biological asset is defined as a living animal or plant. Plant could be a bearer plant or could be a non-bearer plant. Bearer plant are those plants which will provide the output for more than 1 year. Non-bearer plant are those plants like a seasonal plant, okay, which will provide a vegetable or fruits for a season or within a year, right? So non-bearer plant will be covered under Ind AS 41. Bearer plant will be covered under Ind AS 16. Agricultural produce, we have understood so far. Milk is an agricultural produce, mango is an agricultural produce, right? We have seen so many agricultural produce example. So what is an agricultural produce? It is defined as a harvested. Remember, it is not when it is lying on the animal, it is not when it is lying on the tree. When it got harvested, when it got plucked out. So agricultural produce is defined as a harvested produce of the entity's biological asset. Harvested produce of the entity's biological assets, right? What is a harvest? Harvest is detachment of produce from a biological assets or the cessation of a biological assets life process. What is meant by harvest? Harvest, what is meant by harvest? Harvest is detachment. When you are detaching the mango from the mango tree, it is known as a harvest. When you are detaching milk from a cow, it is known as a harvest. When you are detaching wool from a sheep, it is known as a harvest. So it is a detachment of produce from a biological asset or the cessation of a biological asset's life process. There is a hen or there is a chicken. When the chicken or hen got slaughtered and it converts into a meat, okay, so when there is a living hen, okay, there is a living animal, and when this living animal is slaughtered, it will be converted into meat, okay. So that meat is an agricultural produce, okay. So when it was a living animal, it was a biological asset. Have you heard about KFC? So this KFC is providing chicken burgers. So this KFC, for example, they are into poultry. They are into poultry farming. They are breeding chickens. They are breeding hens. Okay. So these are the biological asset, living animal. And when they got slaughtered, it become a meat. So it is a cessation of a biological asset life process as well. Okay. So when this chicken or when this hen or animal got slaughtered, its life process comes to an end. It will become a meat, and this meat will become, when this got slaughtered and converted into a meat, it will become your agricultural produce. You have grown a tree for a timber, in a timber plantation, you have grown a tree, bamboo tree. So when the bamboo tree is lying as a living plant, lying as a plant, it is a biological asset. But when it got cut down, okay, because these bamboos are used for construction, these bamboos are used for so many things. So when it got cut down, when the life processes come to an end, it is again known as a harvest. So harvest is a detachment of a produce or cessation of a biological asset life process. Understood? Jay, I have given you the example of non-bearer plant like tomato, like potato, rice, maize, wheat. As simple as that. Any plant which provide agricultural produce for less than a year, okay, seasonal plant. Lease related to non-bearer plant, yes, it will be covered under Ind AS 41. Yeah, is it clear? Is it clear to everyone? Yeah, what could be the agricultural activity? Agricultural activity involves biological transformation. It is theoretical part. So agricultural activity is defined under the standard. Agricultural activity involves biological transformation and harvest of biological assets. So agricultural activity includes both biological transformation. For example, there is a calf and calf has grown to a cow. Okay, so there is a biological transformation. There is a qualitative change, right? The calf is growing as a cow, and now when it becomes a cow, it will give a milk. Okay, so it includes biological transformation as well as it includes harvest of biological asset. If there is a cow and cow gives some milk, okay, it is again a harvest of biological asset. So this will be covered under agricultural activity. If cow has given birth to a calf, it is again an agricultural activity. If cow is giving a milk, it is again an agricultural activity. So agricultural activity involves biological transformation and harvest of biological assets for sale or for conversion into agricultural produce or for conversion into additional biological assets, right? So when you are for example, when you are planting a bamboo tree, right, or when you are doing a poultry farming for the purpose of sale, for you are just growing chickens or hens for the purpose of sale, it is again an agricultural activity. Or for conversion into agricultural produce, for example, the objective is to slaughter the hens, slaughter the animal and convert into the meat, again it is an agricultural activity. Or for conversion into additional biological asset for the purpose of breeding. Okay, this cow is giving birth to a calf, again it is an agricultural activity. So agricultural activity covers a diverse range of activity. For example, raising livestock is an agricultural activity. Forestry is an agricultural activity. Like in South India, this TVS, which is a two-wheeler company, has planted a 4 acre of forest. Okay, so it is again an agricultural activity. Annual or perennial cropping is an agricultural activity. Cultivating orchards and plantation, floriculture, aquaculture, pig farming, cattle farming, okay, fishing. These all are considered as an agricultural activity, right? Sheena, I have replied to your query that lease related to non-bearer plant will be covered under Ind AS 41, right? What is meant by biological transformation? Biological transformation means the process of growth. Okay, so calf becomes a cow, it is a growth. Degeneration, degeneration, if the animal dies, it is again known as a biological transformation. Production, cow has given birth to a calf, sorry, cow gives us milk. So production means creating a agricultural produce. And procreation, cow has given birth to a calf. So when calf becomes a cow, it is a growth. When the animal dies, when the cow dies, it is a degeneration. When cow gives some milk, it is production. When cow gives birth to a calf, it is procreation, right? So biological transformation means the process of growth, degeneration, production and procreation which cause qualitative or quantitative changes in the biological asset. When I say qualitative, when the animal is maturing, it is a qualitative change. When the animal is breeding, for example, cow giving birth to a calf, it is a quantitative change. Earlier it was a single cow, now cow and calf are there, so it is a quantitative change in a biological asset, right? So biological transformation is a process which is impacting your qualitative or quantitative change in biological asset. It is a growth, degeneration, production and procreation, right? Examples: growth means an increase in quantity or improvement in quality. Growth means growth includes both increase in quantity or quality, right? Degeneration, decrease in quantity or quality. Production, agricultural produce like latex, tea, leaf, wool and milk. Procreation, creation of additional living animal or plant. Okay, for example, banana tree. If you plant a banana tree, there will be so many banana tree that this roots, by these roots, so many banana tree will grow up. Okay, so this is a procreation, this is a growth. So this is known as a biological transformation. These all are theoretical aspects, so no any question will be expected from this theoretical aspect. But yes, you need to understand what is meant by harvest, what is meant by agricultural activity, what is meant by biological transformation, whether if a agriculture produce is lying on a biological asset, whether that has to be recognized and accounted for at that point of time, or it has to be at the point of harvest. So it has to be at the point of harvest, right? Is it clear? So I have also told you this this biological asset and agricultural produce has to be measured at fair value less cost to sell, right? How this fair value has to be calculated? I believe you guys have covered the financial instrument standard and Ind AS 113, which talks about fair value measurement. I believe you guys have already covered that part. So fair value needs to be calculated as per the Ind AS 113, right? So fair value is like a market value. If I go into the market and if I'll sell this asset into the principal market, what could be the value, right? So fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between the market participant at a measurement date. This is just a definition which I'm reading out. So this definition is there in Ind AS 113. Okay. Cost to sell. What is meant by cost to sell? What is meant by cost to sell? See, cost to sell means incremental cost. If I have to sell this biological asset, what additional cost I have to incur for selling this biological asset? For example, in some countries, if you want to sell the biological asset, for example, animal, you have to incur some registration cost, like transfer stamp duty. Or if you want to sell the biological asset, for example, if you have to sell the buffalo or a car from one place, buffalo, calf, or a cow from one place to another, you need to incur a transportation cost. So cost to sell means incremental cost. If that biological asset need not to be sold, probably this cost would not have been incurred, right? So cost to sell are the incremental cost directly attributable to the disposal of an asset, excluding finance cost and income taxes. So under cost to sell, finance cost and income taxes will not taken into consideration. When I say income taxes, for example, you will say that, sir, if I will sell the biological asset, I will have to incur a tax liability of, let's say, 20%. So this is not a cost to sell. Okay. Or for example, I have to incur a finance cost. So this will not be a this will not be a cost to sell. Cost to sell is like a registration cost, transportation cost, freight cost, commission to sell, right? So marketing cost. So these kind of cost is considered as a cost to sell. Bearer plant we have covered in Ind AS 16, but quickly we will again recap. Bearer plant is a living plant that is used in the production or supply of agricultural produce. Okay, is expected to bear agricultural produce for more than one period and has a remote likelihood of being sold as an agricultural produce except for incidental scrap. What is a bearer plant? First of all, bearer plant are those plants which bear agricultural produce, which provide agricultural produce for more than 1 year, and that plant is not expected to sold itself as an agricultural produce. That plant is not expected. So the objective of that plant is to provide output for more than 1 year, right? Guys, I hope it is so far it is clear to everyone. Sheena, I hope you have also got the response of your query. So Sheena is asking, sir, in the table of biological assets, agricultural produce and after harvested products, except dairy cattle, all were covered under bearer plant. So let's look at that. Sheena, this sheep is again an animal. It is not a bearer plant. It is an animal, right? It is an animal. Tree in a timber plantation. Tree in a timber plantation. Okay. So once the tree will fell down, so it will again not provide you agricultural produce again and again, right? So this tree in a timber plantation is not a bearer plant. There is a tree. What is the objective? When this tree will get fell down, so it will provide a log only once in a time. Okay, only once in a time. So it is again not a bearer plant. Dairy cattle is again an animal, right? But if I talk about sugarcane, tea bushes, grapevines, tobacco plant, and rubber tree, yes, these are the bearer plant. These are the bearer plant. Right, Sheena? I hope it is clear now. Lot of participants are interacting and participating. Good students. The more you participate, the more you will learn. So the example of bearer plant is like tea bushes, rubber tree, grapevines, and oil palms. However, produce growing on bearer plant is a biological asset, right? So the tea leaves, coffee leaves, the rubber latex, the grapes, okay, the oil from the oil palms, right? So these are the agricultural produce which will be covered under Ind AS 41. But these things are covered under Ind AS 16, right? So let's do this case study. Illustration number 1. ABC Limited grows wines. ABC Limited grows wines. Harvest the grapes. When I say wines, it is grape wines. It is grape wines. Grape plant, right? Harvest the grapes and produces wine. And this wine is a final output. Which of these activities are in the scope of Ind AS 41? So 1, the grape wine is there. Grape wine means grape plant, which provide the agricultural produce for more than 1 year. Then grapes are there, and then wine is there. So wine is the final product. For example, this is a Kingfisher Limited. Kingfisher Limited grows grape wines. They have grape orchards, right? So they are growing grape wines, and they are plucking the grapes, and they are using these plucked grapes into a wine for producing or manufacturing a wine. So tell me, which of these activities are in the scope of Ind AS 41? Tell me. Which of these activities are covered under Ind AS 41? Yeah. So grape wines, it is a bearer plant. It provides grapes for more than 1 year. It is a bearer plant. So this grape wine is covered under Ind AS 16. Okay. And when these grapes are plugged, it becomes your agricultural produce. And this will be covered under Ind AS 41. When these grapes are plucked from grape vines, it will be recognized, it will be measured at fair value less cost to sell. The accounting entry will be agricultural produce grapes account debit to other income, because there is no cost to other income, right? And after that, it will become an inventory at the same value. So the next accounting entry will be inventory account debit to agricultural produce at the same value, right? So this wine is Ind AS 2 inventory. Okay. So only grapes will be covered under Ind AS 41. Is it clear? Sairam, you are right. Grapes are only covered. Srinidhi, wine, grape wine. Grape wine is a bearer plant. It will be covered under Ind AS 16. Right, Sheena? Simona, Mahendra, Srinidhi, Utkars. Only grapes, which are agriculture produce, will be covered under Ind AS 41. Grape wine is covered under Ind AS 16. It is a bearer plant. Is it clear to everyone, guys? Yeah. Shall I move on? So let's see the solution which is given by the institute. The grape vines are bearer plant that continually generate crops of grapes which are covered by Ind AS 16. When the entity harvests the grapes, their biological transformation ceases and they become agricultural produce covered by Ind AS 41. Wine involves a lengthy maturation period. The process is similar to the conversion of raw material into finished product rather than biological transformation. Hence, it will be treated as inventory in accordance with Ind AS 2. So just make it simple. Grape wine is a bearer plant which will provide grapes for more than 1 year, and hence it is covered under Ind AS 16. Grapes are when the grapes are harvested from the grapevine, it will become an agricultural produce, and this agricultural produce has to be measured and recognized as per Ind AS 41. Okay, and after that it will become inventory. This wine is kind of an inventory, and wine will be covered under Ind AS 2, right? This grapes has to be processed for converting into the wine. Is it clear? Yeah. Is it clear to everyone? Good. So guys, let's come to the recognition. Sir, we have understood that this standard talks about biological asset. In case of a biological asset, we need to see if the biological asset is related to an agricultural activity, then we need to cover here, otherwise not. Biological asset is a living animal. So you need to see whether animal is used for agricultural activity or it does not use for agricultural activity, right? If I purchased a horse only for the purpose of transportation, it is not an agricultural activity, right? If I have purchased an animal for the purpose of event management company, for the purpose of entertaining audience, it is not an agricultural activity, right? It is not an agricultural activity, right? So coming to the plant, we need to see if it is a bearer plant. I mean to say, if it will provide the agricultural produce for more than 1 year, it is covered under Ind AS 16. Otherwise, it will be covered under Ind AS 41. All the agricultural produce, doesn't matter, it is living animal, living plant, whatever it is. So if the agricultural produce is there at the point of harvest, it is again covered under Ind AS 41. After harvesting, it becomes an inventory, or it will be covered under other standard, right? So after harvesting, it will lose the identity from Ind AS 41, okay, and it will go to other standards. Clear? Government grant, of course, if it is related to agricultural activity, it will be covered under Ind AS 41. Land, intangible assets, right of use assets, these things, bearer plant will not be covered under Ind AS 41, and they will be covered under the respective standards. Okay, right? Clear? Is it clear to everyone? Sheena, I hope I have answered your query, and now you're okay with your query. Yeah. Coming to the recognition criteria. So friends, just a minute. Recognition. Now tell me, for the purpose of recognition, you have read PPE, you have read intangible asset. What was the recognition criteria? If I have to recognize my property, plant and equipment, if I need to recognize an item as a PPE, what are the two criteria which you have learned? Future economic benefits should be probable and cost can be measured reliably. Am I right? Future economic benefits should be probable and cost can be measured reliably. Is it clear? Yeah. Future economic benefits should be probable. Okay. So I have grown a tree, or I have grown a plant, or I have purchased an animal, and there is no any use of that animal. There is no any use. And there is no future economic benefit which is expected out of that biological asset. Can I recognize that as an asset? Can I recognize that item as an asset? Forget about biological asset. Forget about Ind AS 41. If any resource which will not provide future economic benefit, can it meet the definition of an asset? Answer is no. It is not meeting even the definition of an asset. What is the definition of an asset? An asset is a resource controlled by the entity which results into the future economic benefit arising out of past events, right? So first of all, if a resource, if an item is not providing the future economic benefit, it is not meeting the definition of an asset, right? So if it is not meeting the definition of an asset, then how can it meet the definition of PPE, biological asset, intangible asset? Because these all are the subset of an asset, right? So first of all, future economic benefits should be probable. Second, fair value or cost can be measured reliably. See, in PPE, in intangible, we have used the word cost can be measured reliably. But here we are using the word fair value can be measured reliably. Why? If cow has given birth to a calf, that calf has a value? Yes or no? If you have to sell the calf, that calf has a market value, right? But probably you will not be able to find out the cost of the calf. How can you find out the cost of a calf? If this cow has given birth to 5 calves, so how will you calculate? Will you say that this cow has eaten for last 6 years, okay, and I have spent so many bucks in upbringing of this cow, right? So how can you measure the cost? How can you measure the cost? So the point is, cost probably cannot be measured reliably. So that is why the standard talks about, if cost cannot be measured reliably, the fair value can be measured reliably, because that calf has a market value, right? If I need to purchase a 1 year or 6 months old cow, which is a calf, of course, then what is the value? So this standard talks about fair value, of course, can be measured reliably. If the cost cannot be measured reliably, at least the fair value can be measured reliably, right? Third is very important definition, very important condition. So future economic cost or fair value can be measured reliably, we are aware. But third is again a very important kind of condition. What is the third condition? Entity controls the asset. This control is very important. There are street animals. There are street animals. There is a cow which is just moving on the street. Can you say that this cow is your asset? Can you say that this cow is your biological asset? Probably you are taking out the milk from the cow, but can you say that every day I will get the future economic benefit from some cow, such cow? And if anyone wants to take this benefit, I can stop him. You cannot stop him. You cannot control that street animal. Okay. So in this case, you are not controlling that cow. So it is even though this future economic benefit is there, even though the fair value of that cow is there, still you cannot control, because you cannot control that cow. You cannot recognize that cow in your books of accounts. Second example, you are a company, and so of course there is a plot of land in this company. So this is a plot of land, right? This is a plot of land, and in your plot of land, so there is a neighboring plot, and in the neighboring plot there is a mango tree. Sir, every time you are taking example of a mango tree, this is the most famous example, or a very layman example, so that you will be able to understand the concept. So there is a mango tree which is lying on the neighboring plot, and some branches of mango trees are just coming to your plot. Okay. And every month, or not every month, every year you are plucking around, let's say, 200 kg of mangoes from this mango tree which is coming into your vicinity. Future economic benefit is there, yes. Whether these mangoes have a agricultural produce have a fair value, yes. But whether the entity control this mango tree, if tomorrow the owner will come and this owner will cut down this mango tree, this owner will, let's say, just cut this mango tree or cut the branches which is falling into your vicinity, can you stop him? You cannot stop him, right? You cannot stop him, right? It means you are not having a control over this asset. You are not having a control over this mango tree. You are not having a control over this agricultural produce. Although you have a future economic benefit, you have a fair value, but you don't control this mango. And hence it will not be recognized as an agriculture produce, as an asset, right? As an asset. Okay. Third example, in some countries, when you buy animal, you have to get it registered. Okay. So when you get this registration done, of course, this animal will be in your control. You are controlling that animal. Or if you see, even in India, if you see the animals, so probably you will find that, you know, these animal owners will put some badge, or put some, you know, identification mark on their ear, or on their, you know, on their ear, or let's say on their head, right? So it means they are controlling that particular animal. They are controlling that animal, right? Or for example, Reliance Industries Limited is one of the biggest producer of mangoes in the world, I can say that. And they are one of the largest exporter of mangoes in India, right? So they have mango orchard. They have a person who are just guarding this mango tree, right? So they have a boundaries, or they have just you know, something which control these mango trees, so no other person or no trespassers will access to these mango trees, right? So we can say that these orchards are controlled by this entity. If you go to the North India, you will have a tea farms, you will see the coffee farms. So you will see that there is a person who is guarding these farms, and these farms are surrounded by a boundary. Okay. And of course, so these trees are controlled by these owners, right? And hence we can say that you know, there is a control also. Okay. No other person or trespasser will access to these tea leaves or coffee leaves, right? So what are the three conditions which needs to be there? The three condition: future economic benefit and cost. Cost, I mean to say fair value here, right? So fair value should be measured reliably, future economic benefit is probable, and there must be control over that particular asset. If control is there, only then you can recognize that as a agriculture, you can recognize that asset as under Ind AS 41, right? Even as a biological asset or as an agricultural produce. I hope it is clear to everyone. So for every biological asset or agricultural produce to be recognized under Ind AS 41, there is a future economic benefit should be probable, there should be a fair value which can be measured reliably, and the entity must be controlling that particular asset, right? So how this biological asset needs to be recognized? the biological assets needs to be recognized at fair value less cost to sell. At fair value less cost to sell. Fair value is kind of a market value. Cost to sell means incremental cost which needs to be incurred for selling these biological assets, right? For example, the fair value of agriculture produce is 5,000 rupees. The fair value of calf is 5,000 rupees. If I need to sell the calf, I need to incur a cost of 500 rupees. So the fair value less cost to sell of calf is 4,500, right? So biological assets shall be measured at fair value less cost to sell on initial recognition and at the end of the each reporting period. Guys, this is one of the standard where initial recognition and subsequent recognition is on a same model, right? So initial recognition as well as subsequent recognition, initial as well as subsequent measurement will be at fair value less cost to sell, right? For example, when this calf was born, so it has to be recognized at fair value less cost to sell. What was the accounting entry? Calf biological asset account debit to other income. 4,500. On the subsequent, for example, this calf was born on 1st August 21. What is the accounting entry on 31st March 22, which is on reporting date? For example, the value of this calf becomes 4,800, right? So again, the accounting entry will be calf account debit, increase in the value of calf, which is 300 rupees to other income. 300 rupees. Okay. So biological assets shall be measured at fair value less cost to sell on initial recognition and at the end of each reporting period. So biological assets, right? But if I talk about agricultural produce, so agricultural produce, there is no subsequent measurement of agricultural produce. Why? Agricultural produce has to be measured only at the point of harvest. So agricultural produce has to be measured at fair value less cost to sell at the point it is harvested from the entity's biological asset. So once mangoes are plucked from the mango trees, once grapes are plucked from the grape vine, once milk is taken out from the cow, once wool is removed from the sheep. Okay. So at the time of detachment, at the time of harvest, it has to be recognized and measured at fair value less cost to sell. But after harvest, it will be covered under other standard, right? So the fair value measurement of agricultural produce at the point of harvest will become the cost of that produce for subsequent accounting as per Ind AS 2 or other applicable standard. For example, it is a sheep, okay? It gives us wool. When the company is harvesting this wool from a sheep, for example, at that point of time, the fair value less cost to sell is 5,000 rupees. So what is the accounting entry? Agricultural produce account debit, which is wool debit to other income, right? 5,000 rupees. After that, the next accounting entry will be for this textile company, this will become inventory account debit to agricultural produce, right? 5,000. This fair value less cost to sell will become a opening value of inventory, right? So in case of agricultural produce, there is no subsequent recognition or measurement as per Ind AS 41, because once the product is harvested, once the produce is harvested, it has to be recognized at fair value less cost to sell. And after that, it will be converted to inventory or other standard, right? So guys, I hope it is clear so far. We have discussed what is the recognition condition, and we have discussed 3 conditions. Future economic benefit should be probable, fair value can be measured reliably, and there must be control. We have discussed the measurement also. So recognition we have discussed, measurement, biological asset and agricultural produce has to be measured at fair value less cost to sell at the time of initial recognition. But for biological asset, for example, tree, for example, animal, there could be a subsequent recognition as well, subsequent measurement as well on the reporting date, right? For example, today the value of the cow is 5,000 rupees. Tomorrow on the reporting date, the value of the cow becomes 6,000 rupees. So this gain and loss will be again go to the P&L, right? And this biological asset needs to be debited. But for agricultural produce, of course, the initial recognition is at fair value less cost to sell. But once the agricultural produce is harvested, it will become an inventory or other asset as per the other standard, right? So there is no point of subsequent recognition or measurement for agricultural produce, but yes, for biological asset, it is there. I hope you guys have understood. I have taken so many examples. And if you remember, I have taken the example of Nestle also, this mango, pickles, right? Do you remember this example? So once mangoes are plugged, it has to be measured at fair value less cost to sell. Then it went to cold storage, right? So it will become an inventory, right? So after that, subsequent recognition measurement will be inventory standard, not as per Ind AS 41. We have discussed the example of this case study 1 as well. Yeah. I hope it is clear to everyone, guys. Sheena, when you have plugged the mango, of course, mango has a value, right? So this agricultural standard provide you a guidance. And what guidance it provides you? If cow has given birth to a calf, again, it is unrealized, right? But this calf has a value. This mangoes have a value, okay? And that is why it is not recognized at cost. It is recognized at fair value. So fair value less cost to sell, right? So if you recognize an asset at fair value less cost to sell, you will debit the asset. But what will you credit? What will you credit? You will credit other income. Why? Because there is no any outflow which is associated with the recognition of an asset, right? When you are saying it is unrealized, of course, when you are plugging the mangoes, you are plugging the mangoes for the purpose of sale or for the purpose of producing other finished product, right? So it will become your inventory, and inventory must have a value. So that is why we are putting a next entry as an inventory account debit to agricultural produce account, right? Doesn't matter if it is unrealized. There are a lot of financial instrument standard where you are doing mark to market. For example, you have purchased an investment and the value of the investment has grown up. So what you will do? You will debit the investment and you will credit the P&L, right? So even though in accounting standard, I mean to say Ind AS, we are also recognizing the unrealized things as well, right? Clear? Inventory, even though inventory has not been sold, so J inventory has to be recognized after point of harvest. For example, the first entry will be agricultural produce account debit to bank to other income. The next entry will be inventory account debit to agricultural produce account, right? It is just immediately after your harvest. At the point of harvest, it is agriculture produced. After harvest, it will become inventory. So it is just another entry, right? So guys, it's 8:17 now. Let's have a 10 minutes break. And after that, we will do some case studies. We'll solve some practical aspect of it, right? So it is 8:17 now. We will start at 8:28. Yeah. Yeah. So students, we have discussed the recognition, we have discussed the measurement, and now let's discuss this particular case study on measurement. A farmer owned a dairy herd of 3 years old cattle as at 1st April 2001 with a fair value of 13,750 and the number of cattle in the herd was 250. Right. So on 1st April 2001, the information is given. There were 250 quantity of cattle and the total fair value is given as 13,750. So if I will divide 13,750 divide by 250, what is the number? So the number comes out at around 55 rupees, right? 55 rupees per cattle, right? And after 1 year, the fair value of 3-year cattle as on 31st March 2002 was 60 per cattle. The fair value of 4-year cattle as on 31st March 2002 is 75 per cattle. So in the beginning, on 1st April 2001, the fair value of 3-year-old cattle is given, and this farmer is having 3-year-old cattle. The quantity is 250 and the amount is 55 rupees per cattle, which is fair value, right? After 1 year, that is on the reporting date, this becomes 60 rupees per cattle, right? So the value of 3-year cattle. See, in the beginning, the value of 3-year cattle was 55. At the end, I mean to say after 1 year, the fair value of 3-year cattle becomes 60 rupees. And the fair value of 4-year cattle becomes 75 rupees. So if you can see here, the cattle which was 3 years old 1 year ago, they become 4-year-old cattle after 1 year. They become 4-year-old cattle, right? But in the question, after 1 year, the fair value of 3-year as well as 4-year both are given, right? So question is pretty clear in the first 2 lines and in the next 2 lines, but the last line says that calculate the measurement of group of cattle as on 31st March 2002, stating price and physical change separately. Although this question is very simple, for example, you are saying that, sir, in the beginning, the value of 250 cattle is 13,750, right? 55 rupees per cattle. At the end, this 3-year-old cattle become 4-year-old cattle, and now the value becomes 75 rupees, right? So when I reduce 75 minus 55, so on every cattle I have a fair value gain of 20 rupees. So what I can say that simple, if I have to just see the fair value of this cattle after 1 year, of course these become 4-year-old cattle, and I can simply do 75 multiplied by 250. So whatever will be there, this will become the fair value on the reporting date. And the difference between the opening value versus closing value will go into the fair value gains, right? So other income will be credited. As simple as that. But the question is asking about, you have to provide the measurement of group of cattle, stating what is my price change and what is my physical change separately. Understood? So this is the ask of the question. So let's solve this question. Let's solve this question, right? First of all, let me know if you are able to see the Excel file. Please let me know if you're able to see the Excel file. Are you able to see the Excel file? Yeah. So we are just doing solution to case study number 2, case study 2, right? So the informations are given. What all informations are given in this question? The informations on 1st April 2001 is given, April 1, 2001. Yeah. This information is given. And what is given in the information? Total fair value is given. Total fair value of the cattle group is given, which is my 13,750. 13,750. Okay. Number of cattle is given. Total fair value is given. Number of cattle is given. Number of cattle. This is 250. So I can find out my fair value per cattle. How this can be derived? 13,750 divided by 250. It is 55 rupees. And what is the age of the cattle? It is 3 years old, right? The age is 3 years, right? Same information is given on 31st March 2002. 31st March 2002, right? Same information is given. What is the same information which is given for 31st March 2002? What all informations are given? It is given fair value per cattle of 3 years age and fair value per cattle of 4 years age. The two informations are given: fair value per cattle 3 years, 4 years. 60 rupee is the fair value per cattle for 3 years and 75 is for the 4 years. These two informations are given, and the requirement of the question is calculate the fair value stating the price change and physical change separately, right? Price change and physical change separately. Calculate the fair value stating the price change and physical change separately. Now, what is meant by price change and what is meant by physical change? Okay, so let's solve this case study. Price change. What is meant by price change? Price change means change in price without biological or physical transformation. Change in price without biological or physical transformation. Without biological or physical transformation. What does it mean? It means if the 3-year cattle will become 3-year cattle, if the age of cattle will not grow, then what is the price difference? Okay, so in the beginning, the price of 3-year-old cattle was 55 rupees. At the end, still today, the price of this 3-year cattle is 60 rupees. So what is the price change? Price change is 60 minus 55. Okay, 60 minus 55. I hope my Excel file is visible to everyone. Yeah, okay. So the price change without any physical transformation, if there is no any growth in this cattle, if this cattle will not get mature by 1 year, even though the price change is 5 rupees, right? The price change is 5 rupees. And what is the fair value change? So this is per cattle. What is the total fair value change? What is the total fair value change? The fair value change is 5 rupees per cattle is if the price change, then 5 multiplied by 250, 1250 is my fair value change, right? What is meant by physical change? What is meant by physical change? Physical change means change in price due to biological transformation or physical transformation. Change in price due to biological or physical transformation. Change in price due to biological or physical transformation, right? So what is the change in price due to biological or physical transformation? If this cattle will never grow, still we have 60 rupees of price. But since this cattle has grown to 4 years, then what is my physical change? What is the change due to change in the transformation or due to the biological change? It is 75 minus 60, right? 4 years versus 3-year difference as on the reporting date 15. What is my fair value change? 15 multiplied by number of cattle, which is 250, 3750. And what is the total here? The total is, the change is 5,000 rupees. The change is 5,000 rupees. The total change is 20 rupees per cattle. 20 multiplied by 250 comes out at 5,000 rupees, right? Is it clear to everyone, guys? Price change, physical change. I hope these concepts are clear to you. Yeah. So in biological asset kind of concept, when the question will talk about, you have to state the price change and physical change separately. The question wants you that what is the change due to physical transformation, due to biological transformation, and what is the change without any biological transformation, right? So these kind of disclosures are also there in case of Ind AS 41. I hope this case study is clear to everyone. I hope this case study is clear to everyone. So this is the fair value change. And what is the total fair value? What is the total fair value on the reporting date? The total fair value on the reporting date is how much? 75 rupee is the fair value of 4 years old cattle. 250 is your number of cattle. 18,750 is the total fair value on the reporting date. What was my opening value? My opening value was 13,750. So what is my change? My change is 5,000 rupees. Sorry. My change is 5,000 rupees. Fair value change. My fair value change is 5,000 rupees, right? This is my change. Yeah. And what is the accounting entry? The accounting entry is cattle account debit or biological asset account debit, or you can write that biological asset account debit to other income, and the amount is 5,000. Yeah, and this is with the fair value changes. Right. I hope it is clear to everyone. So J, change in biological transformation include change in price? Yes, J. So basically, if the question is talking about what is the change due to biological transformation, so of course you have to take it like 75 minus 55. But if the question is asking what is only price change, means if there is no biological transformation, for example, you have a mobile, okay, and the cost of mobile today is, let's say, 1,000 rupees, and tomorrow the same mobile will cost, let's say, 2,000 rupees. So without anything, the change is 1,000 rupees, right? But for example, if you have put some, accessories in this mobile, and after putting some accessories, the value of mobile has grown up, right? The value of mobile has been increased. So it means there is some transformation which has been there, and hence due to the transformation, what is the additional value increase, right? So 5 rupee was the value increase, even though this cattle has not grown up. But what value addition this cattle has given just because this 3 year becomes 4 years? So this 15 rupees is additional value creation, right? So this is a price change and physical change. Price change means change in price without any biological or physical transformation, and physical change means change in price due to biological or physical transformation, right? I hope it is clear to everyone now. I have also given the journal entry for this. Yeah. So let's move to again PowerPoint presentation. So if you see this solution of this particular question, so fair value as on 1st April 13,750, increase due to price change is 250 multiplied by 60 minus 55, it is 55, 1250. Increase due to physical change, 250 multiplied by 75 minus 60, it is 3750. Fair value as on 31st March 2002 is 18,750, right? Clear? Is it clear? So Muhib, this will be considered as a normal activity, right? It is not an exceptional activity. Is price change transformation? No, price change is not a transformation, right? Price change is just due to change in market value, right? For example, this Russia and Ukraine war is going on, okay? So due to this war, when the stock market was declining, the gold prices was, or metal prices is increasing, right? So is there any transformation? No transformation is there, okay? So but if due to the quality of the gold, if the gold price is increasing, then you can say that there is a transformation, right? So in the example of a cattle, 3 years price, last time it was 55, now it is 60. So 3 years is 3 years. So there is no biological transformation, there is increase in market value. But when it becomes 4 year, of course, the price of 4 year is expensive in comparison to price of 3 years old, right? So it is a transformation. Yeah, reporting of gains and losses. So guys, before getting into the theory, I will take you on a practical aspect, and I'll again move on to my Excel file, and let me know if my Excel file is again visible. Yeah, I hope this Excel file is visible. Is it visible? Yeah. So we are talking about gains and losses on initial and subsequent measurement. Gains and losses on initial and subsequent measurement. Losses on initial and subsequent measurement. And this slide, let me tell you, this slide will clear all your concepts. Subsequent measurement, right? This slide is very important, and this will help you at the time of your exam as well, right? The first case is like the company has purchased a cow at 10,000 rupees on 1st July 2021, and the transportation cost of the cow is 500, right? The cost to sell of the cow is 500. So it is case one. Case one. The company has purchased a cow for rupees 10,000. The company has purchased a cow for rupees 10,000 on 1st July 2021. Okay. The cost to sell, or let's say the transportation cost is rupees 500, right? The transportation cost of the cow is rupees 500. Okay. So what is my initial recognition, initial measurement criteria? What is my initial measurement criteria? At what value I have to initially recognize this asset? At what value? Fair value less cost to sell, right? Fair value less cost to sell. We have already discussed this concept, that at the time of initial measurement we have to measure at fair value less cost to sell. Fair value less cost to sell. Initial measurement should be at fair value less cost to sell. Clear? Is it clear? What is my fair value here? What is my fair value? My fair value is 10,000 at which I am buying this cow. And what is my cost to sell? My cost to sell is, if I need to sell this asset, I have to incur a transportation cost, and my transportation cost is 500 rupees. What is my fair value less cost to sell? My fair value less cost to sell is 10,000 minus 500, right? I'm just taking out what is my fair value less cost to sell. I'm just calculating what is my fair value less cost to sell. So what is the accounting entry at the time of initial recognition? The accounting entry will be biological asset account debit. Biological asset, which is a cow. Sorry. Biological asset account debit, which is cow. Account debit to cash account, to cash or bank. So what is my cash and bank? What is my cash and bank? Cash and bank has been credited by which amount? Cash and bank has been credited by which amount? First, I have incurred 10,000 rupees on purchase of cow. Second, I have incurred 500 rupees on transportation cost. This biological asset has to be recognized at fair value less cost to sell, which is 10,000 minus 500, right? 10,000 is the fair value, and I have to incur 500 rupees when I am going to sell this asset, right? I have to incur that also. So 10,000 minus 500, and the difference will go to loss on initial recognition. Loss on initial recognition, right? Debit. Right? 10,500 minus 9,500 is 1,000. Whether this accounting entry is clear to everyone? Whether this accounting entry is clear to everyone? So guys, although you are spending fair value as well as you are incurring your cost to sell. you are incurring your cost to sell. Okay, but here you have to recognize the biological asset at fair value less cost to sell as per the guidance given by the standard, right? You have to recognize biological asset at fair value less cost to sell, and the difference will go to loss on initial recognition. Or alternatively, you can put second entry as well. Alternatively, you can do biological asset cow account debit 9,500. Your to cash fair value is 10,000, and 500 will be loss on initial recognition. And the second entry, transportation cost debit, which will go to P&L, transportation cost debit to cash, which will be 500 rupees, right? So alternatively, 1,000 has gone to P&L in the form of transportation cost 500, loss on initial recognition 500. Both the accounting entries are correct. Whatever accounting entry you want to make, both the accounting entries are correct in this scenario, right? I hope it is clear to everyone, guys. I hope it is clear to everyone. Yeah, is it clear to everyone? Cost to sell means if you have to sell this asset, what is the incremental cost you have to incur? For example, if today I need to sell this cow, I need to incur a transportation cost to reach at a market where I need to sell this cow, right? Cost to sell means incremental cost of sale. For example, if I need to sell this cow, I need to incur a commission cost, I need to incur a stamp duty, I need to incur a registration charges. So whatever cost will be there for selling an asset, that is known as a cost to sell, which is directly attributable to the disposal of the asset. Yeah. Second case number 2. So the first case we have discussed, right, at the time of initial recognition. What is my second case? My second case is, for example, on the reporting date today, the fair value less cost to sell of such cow has been increased to 9,800. So as on reporting date, as on March 31st, 2022, for example, today, the fair value less cost to sell become rupees 9,800, right? Then what we need to do? What we need to do here? In this case, what I need to do? Again, biological asset cow account debit. Biological asset cow account debit, right? To other income, which is nothing but fair value changes, which is 9,800 minus 9,500, right? Initial recognition. Credit 300, right? So this is my accounting entry. Here, just write the narration. Being cow purchased and recognized and measured at fair value less cost to sell. Being the fair value changes recognized. Being the fair value changes recognized. Yeah, clear? Being the fair value changes recognized. Clear? So this 9,500 become 9,800. Subsequently, what we have done? We have debited biological asset, we have credited other income. Case number 3. Case 3. The cow has given birth to a calf. The cow has given birth to a calf. The fair value less cost to sell of a calf is rupees let's say 2000, right? Then what will be the accounting entry? Now the cow has given birth to a calf and the company has not incurred any cash outflow. Then whether we need to recognize this calf? Of course, yes, we have to recognize this calf, right? Because as per Ind AS 41, this has to be recognized at fair value less cost to sell. So what is the accounting entry? Biological asset, calf account debit, biological asset, calf account debit, right? By 2000 rupees to other income, because the company has not incurred any cash outflow to other income, right? It is 2000 rupees. So being the calf recognized, in the books, right? So this is the accounting entry. So I have given you 3 accounting entries: one at the time of initial recognition at fair value less cost to sell, then the subsequent recognition and measurement for biological asset, then the third, in the case of procreation or generation, what is my accounting entry, right? Okay, I hope this 3 accounting entry is clear to all of you. First, we have talked about the initial recognition and measurement. The second, we have talked about, right? So the second, we have talked about the subsequent recognition and measurement. The third, we have talked about the birth of a calf or the birth of a biological asset, right? Is it clear to everyone? Sairam is asking, sir, but we incurring the cost to purchase the cow, then why you deducting the cost from fair value of cow? So Sairam, I am only deducting for calculating the fair value of cost to sell. What I am saying, if I am incurring such transportation cost today, so probably when I'm going to sell this cow, of course, I need to incur the same transportation cost, right? I need to incur the same transportation cost. When this cow will come at my place and I have to go to the market to sell this cow, of course, I need to incur a transportation cost. So I am just taking out what is my fair value less cost to sell. It is not like that I'm not recognizing the transportation cost. I am recognizing the transportation cost. That is why I've credited the cash by 10,500, not only 10,000, right? But I am calculating what is my fair value less cost to sell, right? For example, my fair value is 10,000 today and I'll incur 500 rupees on transportation. So net, I will end up saving 9,500 rupees, right? Clear? Is it clear? Yeah. I hope these 3 accounting entries are clear to everyone, guys. Okay, let's go to the PowerPoint presentation again. Reporting of gains and losses. When biological asset is first recognized at fair value less cost to sell, any gain or loss is recognized in profit or loss. A loss can arise due to the requirement to deduct the cost to sell, right? So why this loss is recognizing? Because we are deducting the cost to sell from fair value. That is why there is a loss, right? A gain can arise. When a gain can arise? When a biological asset is first recognized following the birth of a calf. We have seen that case 3. When a gain is recognized in 2 cases. One, when there is a subsequent improvement in the fair value. Second, when at the time of first recognition, if it is due to a birth. Gains and losses will also arise over the life of biological asset to reflect the changes in the fair value, less cost to sell, right? These gains or losses will be reported in profit or loss in the period in which they arise. Okay, in which they arise. Is it clear? So if we look at the summary, gain or loss from biological asset, gain or loss on initial recognition could be there. Why? Because there is a fair value less cost to sell concept. Change in fair value less cost to sell on the reporting date. So gain or loss on initial recognition can be there. Then changes in fair value on the reporting date could be there. Case 2, remember case 2 where there is 9,500 becomes 9,800, right? When a loss may arise because cost to sell are deducted in determining the fair value less cost to sell of a biological asset. When a gain may arise due to the reproduction. Okay. In case of agriculture produce, The gain will only be recognized at the time of initial recognition. Subsequent is not there. Why? Because once the agricultural produce is harvested, it will become an inventory. For example, a gain or loss may arise on initial recognition of agricultural produce as a result of harvesting. Okay, and this will go to P&L in the period in which it arises. Okay. Okay, so we'll do this particular case study. Abraham's goat has given birth to a baby goat. Estimated fair value of the baby goat is $150 or 150 rupees. You can say that, right? Don't confuse between rupee and dollar. Sairam is asking, sir, in every year we should do the calculation for the asset to get the value of the asset. Yes, Sairam, at every reporting date, this biological asset has to be measured at fair value less cost to sell. And if there are changes in the fair value less cost to sell, if there is a decrease, there is a loss. If there is an increase, there is an income, right? Abraham's goat has given birth to a baby goat. Estimated fair value of the baby goat is 150 rupees. He estimates that if he wishes to sell the baby goat, he will have to pay another 20 rupees of carries out cost and 25 rupees of sales commission. How the baby goat will be measured initially? Tell me. So he is saying that if he has to sell this baby goat, the cost of the baby goat, the fair value of the baby goat is 150. What is the cost to sell? And he estimates that the cost to sell is, first, 20 rupees he has to pay carries out cost. If he has to sell, he has to incur a transportation of 20. And 25 rupees he has to incur as a sales commission. So this is carries out cost, this is a sales commission. 45 rupees is the total cost to sell. Yeah. So tell me, how this baby goat will be measured initially? It has to be measured initially at fair value less cost to sell. What is my fair value? 150. What is my cost to sell? 45. What is my fair value less cost to sell? 105 is my fair value less cost to sell. Yeah. So cost is measured at fair value less cost to sell, right? And what is my gain or loss on initial recognition? It is 105. What is the accounting entry? The accounting entry is baby goat biological asset, baby goat account debit, 105 to other income, because this baby goat has been recognized due to a birth. Okay, I hope it is clear to everyone. Yeah, any doubt, any problem so far? Is it clear to everyone? Great. XYZ Limited, let's move to illustration number 3 now. XYZ Limited on 1st December 2003 purchased 100 sheep from a market for rupees 5 lakh. Okay, so what is the cost of one sheep? It is 5 lakh divided by 100. So 5,000 rupees is the cost of one sheep. The transaction cost of 2% on the market price of the sheep was incurred, which was paid by the seller. So XYZ is a company and it is purchasing a sheep from the market, which is 5 lakh rupees. And the 2% transaction cost has to be paid by the seller. Means what is my cost to sell? 2%. 5 lakh multiplied by 2% is 10,000. Sheep's fair value increased from 5 lakh to 6 lakh on 31st March 2004. So on the reporting date, after 4 months, when this sheep was purchased, on the reporting date, the fair value has been increased by 1 lakh rupees. Transaction cost of 2% would have to be incurred by the seller to get the sheep to the relevant market. And if this person has to sell the sheep, for taking out this sheep to the market, they have to incur a transaction cost of 2%. Right. Determine the fair value on the date of purchase and the reporting date and pass necessary journal entries thereon. Right. Is it clear? Yeah. So first of all, what will be the accounting entry at the time of initial recognition? What will be the accounting entry? At the time of initial recognition, remember my Excel file. This has to be recognized at fair value less cost to sell. What is my fair value less cost to sell? 5 lakh multiplied by 2%, 10,000 is my cost to sell. So here my fair value is 5 lakh. My cost to sell is 2% of 5 lakh, which is 10,000. My fair value less cost to sell is 4,90,000. This is my fair value less cost to sell. Okay. What is the accounting entry? Biological asset, sheep account debit, 4,90,000. To bank, 5 lakh. Loss on initial recognition, 10,000 rupees. Right. On the reporting date, what will happen? On the reporting date, the fair value will become 6 lakh rupees. The fair value will become 6 lakh. And what is the cost to sell? It is again 2%. 6 lakh multiplied by 2% will comes out at 12,000. In the question it is given. That 6 lakh is there. So 6 lakh multiplied by 2% comes out at 12,000 rupees, right? 12,000 rupees. So this will comes out at 5,88,000. So from 4,90,000, the value has been increased. From 4,90,000, the value has been increased to 5,88,000. So 588 minus 4,90,000, 98,000. So biological asset has to be debited by 98,000, and changes in fair value has to be credited by 98,000. Right. So biological asset account debit to gains, which is change in fair value, 98,000. Right. Is it clear? Any doubt? Any problem? I will appreciate your response. Thanks, Utkarsh. Thanks, Megha. Thanks, Madhav. Yeah. Is it clear? Then coming to the government grants. Yeah. So government grant. We have discussed that normally the government grant is covered under Ind AS 20, accounting for government grants and disclosure of government assistance, right? But if the government grant is related to agricultural activity, it is covered under Ind AS 41, right? And normally government grant is received for biological asset, right? If the government grant is received for bearer plant, it will cover under Ind AS 20. But if the government grant is received for biological asset, okay, so it will be covered under Ind AS 41. But there are two things. If the government grant is received from biological asset and the biological asset is measured at fair value less cost to sell, when it is measured at fair value less cost to sell, it will be measured at fair value less cost to sell when it is covered under Ind AS 41. But if it is covered under Ind AS 16, for example, there is a biological asset which is a bearer plant, and that bearer plant will come under Ind AS 16. And when it will come under Ind AS 16, it will be recognized initially at cost. It will be measured at cost. So if a biological asset has to be measured at cost, the government grant related to that biological asset will be recognized as per Ind AS 20, which is a government grant standard, right? So if the biological asset is measured at cost, then government grant received for that biological asset has to be recognized as per Ind AS 20, right? But if the biological asset is measured at fair value less cost to sell, it means within Ind AS 41. In that case, the government grant is also accounted for or treated under Ind AS 41, right? So government grant has to be recognized as per Ind AS 41. Clear? I hope it is clear. Is it clear, guys? So J, the bank has only been credited with the value of the sheep, which is 5 lakh rupees. You can see here. So this company has purchased 100 sheep from a market for rupees 5 lakh. You can see that the bank has been credited only by 5 lakh rupees, right? The bank has not been credited by 5 lakh plus cost. The biological asset has been recognized at fair value less cost to sell. Fair value is 5 lakh, cost to sell is 10,000. Okay, and the loss has been recognized for 10,000. But please understand, The bank has not been credited by 5 lakh plus cost. The bank has been credited by the value of the value of the sheep only, right? Is it clear? So Sheena is asking, what is the weightage of this? What is the weightage from this particular standard? It could be 5 marks or 4 marks, Sheena, right? So if the biological asset is measured at fair value less cost to sell, then the government grant is also recognized as per Ind AS 41. Okay. And now there are two kind of government grant. It could be conditional, it could be unconditional. For example, government is saying that if you want to just raise a forest in your vicinity, or let's say if you will plant 100 trees, if you will plant 100 trees, we will give you 5 lakh rupees of government grant. So it is conditional. It is conditional, right? So when the government grant will recognize, when the condition will be met, right? When the condition will be met. So if the government grant is conditional, then recognize the government grant in profit and loss account when the condition attaching to the government grant are met, right? When the conditions are met. Clear? When the conditions are met. But if the government grant is unconditional, government is giving you 5 lakh rupees. Okay. You have said that, yes, I want to plant some trees in my factory just to eradicate the pollution. Okay. Or just to, make this environment much better. So government has given you 5 lakh rupees without any condition. So if it is unconditional, then you need to recognize the government grant in profit and loss when it becomes receivable, when the receipt becomes certain. Actual receipt is not important. When the receipt becomes certain, right? For example, there could be some paperwork. The paperwork has been done and the amount has been processed. The only thing is amount has not been received, but the government has already approved. Okay. So in that case, this government grant can be recognized as an income in the P&L account. But if it is conditional, then it has to be recognized when the condition will be met, right? Example, Sun Limited cultivated a huge plot of land. The government offers a grant of 10 crore rupees under the condition that the land is being cultivated for 5 years. So if this entity will use the land for cultivation for 5 years only, then government grant will be given. If the land will be cultivated for a shorter period, the entity is required to return the entire grant, right? For example, the government has given a 10 crore rupees and this entity has cultivated this land for only 4 years. In that case, the entire 10 crore has to be refunded back to the government. Therefore, the government grant will be recognized as income only after 5 years of cultivation. Only after 5 years of cultivation, right? Why? Because it is a conditional grant, right? So when this 5-year condition will met, only then government grant will be recognized. The situation would be different if the returning obligation referred to the years of not cultivating the land is with respect to retention of the grant for the period till which the entity has cultivated the land, for example. So in this case, the first case was the government will take the entire grant if the cultivation is not for 5 years, right? Just a minute. I think there is a problem in my pen. Just a minute. Yeah. So the first one is entire period. If the cultivation is for entire period, only then government grant will be recognized after 5 years, right? The second one is pro rata. The government will not ask for the money for which for pro rata for the year on which the land is cultivated, right? For example, 1, 2, 3, 4, 5. So when I say pro rata, so if the entity has cultivated for first year, entity can recognize 2 crore. If the entity has cultivated for another second year, it can recognize 2 crore additionally. For third year, 2 crore additionally. For fourth year, 2 crore additionally. For fifth year, 2 crore additionally. So the entity will recognize 2 crore every year from 1 to 5 year. Every year, entity will recognize 2 crore per annum. If the condition is government will not demand the entire money only to the period for which the land has cultivated. So, okay. So if pro rata recognition can be there, the entity has to recognize every year. But if the entity will not cover the entire period, entire money will be refunded, then it has to be after 5 years, right? Then it has to be after 5 years. It is clear? Is it clear? Yeah. So if the government grant is conditional, then you have to recognize the government grant in profit and loss when the conditions are met. If it is unconditional, then you have to recognize the government grant when it becomes certain, okay, when it becomes receivable. Now, friends, we will do a complete or a comprehensive case study to touch upon the entire concept of Ind AS 41, right? This is illustration number 40, illustration number 4, right? So this will cover the entire concept of Ind AS 41. Moon Limited prepare financial statement to 31st March each year. This is a company, Moon Limited, and it prepare financial statement to 31st March each year. On 1st April 2001, the company carried out the following transactions. Purchased a land for rupees 50 lakhs rupees. This company has purchased a land. Whether land will be covered under Ind AS 41, whether land will cover under Ind AS 41. Yeah. Whether land has to be covered under Ind AS 41. Answer is no. Land is scoped out from Ind AS 41. Land is either a property, plant and equipment or investment property, right? So this is a Ind AS 16 or Ind AS 40. Of course, land has to be recognized at cost. So this is a balance sheet item. Purchased 200 dairy cows. Purchased 200 dairy cows. This company has also purchased some cows, 200 cows. Average age at 1st April 2001 is 2 years. What is the average age? The average age is 2 years. Okay. The average age is 2 years for rupees 10 lakhs. So 200 dairy cows and average age is 2 years and 10 lakh rupees is the cost. So what is my price? My price is 5,000 rupees per cow, right? 5,000 rupees per cow. So 5,000 multiplied by 200, right? It becomes 10 lakh rupees. So this is my biological asset. Received a grant of rupees 1 million towards the acquisition of the cows. And this grant was non-refundable. So no condition is there, non-refundable grant is there. So this company has also received a grant of 10 lakh rupees towards the acquisition of cows. So this 10 lakh rupees, this 1 million, 10 lakh is also received as a grant. So this grant has to be recognized as an income, right? So that these two are the assets and this is one of the P&L item, income. For the year ending 31st March 2002, this is within a year, the company has incurred following cost: 6 lakh rupees to maintain the condition of the animal, food and protection. So this is a recurring cost. This is a recurring cost for the biological asset, to maintain the biological asset. So this recurring cost will go to the P&L. This is again P&L item. This 4 lakh rupees as a breeding fee to a local farmer. Again, it is a P&L item. This 4 lakh has to be charged to the P&L. On 1st October 2001, after 1st April, 1st October came and 100 calves were born. 100 calves were born. So it means you have to recognize this value of calf as a other income. So this calf will come into the balance sheet and the fair value less cost to sell on 1st October 2001 will be your P&L, right? There were no other changes in the number of animals during the year ended 31st March 2002. So initially it was 200 cows. There were 100 calves which were born during the year. Otherwise, there is no any changes. No other cow and calves are there. No kettles are there. Nothing. No any cow have died. Okay. So this number is 300 at the end of the year. As of 31st March 2002, Moon Limited had 3,000 liters of unsold milk in inventory. Moon Limited had 3,000 liters of unsold milk in inventory. So as on 31st March 2002, the Moon Limited has 3,000 liters of milk, which came from the cow. 3,000 milk of inventory is also there. Inventory is again an asset. Okay. And of course, this milk has came from a cow. So before inventory, it was a harvested produce, agricultural produce. And of course, this milk has to be recognized as an agricultural produce and which has to be as an other income, right? The milk was sold shortly after the year end at the market prices. So after year end, this milk was sold. right? So guys, in the first slide, some informations are given. And on 1st April, the information is given that is a land which was acquired, 200 cows which were acquired. There was an unconditional government grant. There was some maintenance expenses like 6 lakh and 4 lakh rupees of maintenance expenses are there, right? Then on 1st October, 100 calves were born, and there were 3,000 liter of unsold milk inventory, right? This is also there. Information regarding fair values is as follows, right? Some information is given for the fair values. Land fair value is also given on 1st April. Land fair value is given as 50 lakhs rupees when it was purchased. On 1st October 2001, the fair value is 60 lakh rupees. On 1st October 2001, the fair value is 60 lakh rupees, right? And on 31st March 2002, the fair value is 70 lakh rupees. On the fair value is 70 lakhs rupees. So friends, do I need to consider this fair value as cost to sell for land? Do I need to consider this? Do I need to consider this fair value as cost to sell for the land? Yeah? No, because land will not cover under Ind AS 41. So this is not relevant for land. This is not relevant, right? For land, it is not relevant. It is not a Ind AS 41 item. Okay? It is not an Ind AS 41 item. So land has to be recognized at 50 lakhs. New calves born per calf. Okay? So when the new calves were born on 1st October, the value was 1100 and it become 1200. Whether this information is relevant? Yes. Why? Because we have to recognize the calves at fair value less cost to sell. Okay, and fair value less cost to sell on the date of birth was given. So we have to recognize this calf on fair value less cost to sell. Accounting entry will be biological asset calf account debit to other income. And subsequently, there is an increase in the fair value. Subsequently, we need to recognize this movement increase also, right? 6-month-old calf fair value is also given. Is it relevant? So if a calf has born on the 1st October, on 31st March, this calf will become 6 months old. Can you understand? When this calf was born on 1st October, so the value was 1100. And on the reporting date, that is on 31st March 2002, this calf becomes 6 months old. So you have to see the fair value less cost to sell for 6 months old calf. So from 1100 it become 1300. From 1100 it become 1300, right? So there is a price change, there is a physical change. If this calf would have born on 31st March 2002, the value was 1200. It means 100 rupees the price change, 1200 minus 1100. And the another 100 rupees is the physical change, right? If this calf would have born on 31st March 2002, the value has been shifted from 1100 to 1200. So 100 rupees the price change. And the another 100 rupees the physical change, right? So it is a physical change. Clear? And the 2-year-old cow's fair value is given. So this 2-year-old cow has been purchased on 5,000 rupees. And on the reporting date, it will become 3-year-old cow, right? So that is why 3-year-old cow fair value has also been given. So from 5,000, we have moved to 5,500. Okay. So if these cows were 2-year-old cows, then the price change is 5,200 minus 5,000. But the physical change is 5,500 minus 5,200. Although the movement is 500, but 500 rupees out of 500, 200 belongs to price change, 300 belongs to physical change. And there is a value of the milk which is given. And on 31st March 2002, the fair value of the milk, fair value less cost to sell of the milk is 24 rupees. So agricultural produce is also required to be recognized at fair value less cost to sell. You are required to prepare the extract from balance sheet and P&L that would be reflected in the financial statement of the entity for the year ended 31st March 2002. I hope question is clear to each one of you. I hope this question is clear to all of you. Yeah. So let me move to my Excel file so that I will, solve this case study, because this is very important case study and this is a comprehensive case study. I hope my Excel file is visible to everyone. Yeah. So this is the case study 5. And illustration number 4. Illustration number 4. Right. Solution to illustration 4 of ICAI study material. Right. Clear? If you see this particular question, so what you are required to do, you have to just prepare the balance sheet extracts and statement of profit and loss, right? So let's prepare the balance sheet extract, balance sheet extracts as at March 31st, 2002, right? P&L extracts for the year ended, March 31st, 2002. Balance sheet extracts as at March 31st, 2002, P&L extracts as at March 31st, 2002, right? Clear? So first of all, in the balance sheet side, of course, on the asset side, there is a land which is a property, plant and equipment, right? And equipment. In the property, plant and equipment, there is a land, right? And what is the cost of the land? The cost of the land is 50 lakh rupees, right? 50 lakh rupees. 1, 2, 3, 4, 5, 50 lakh rupees. Okay. So just a minute. This is my 50 lakh rupees. Yeah. This is 5 lakh, not 50 lakh. Yeah, this land has been recognized as 50 lakh rupees. Okay. The second, balance sheet, when I am preparing my balance sheet extracts, okay, what is the second line item? The second line item was this company has purchased 200 dairy cows. So biological asset, right? When I say this biological asset, so there is a cow, and there is a calf. But when I talk about my cow, this cow is 3 years old, right? This cow is 3 years old. And this calf is a 6 months old calf on the balance sheet date. Now we need to calculate the value of this cow and the calf, right? So let's prepare some working notes here. Let's prepare some working notes for calculating the value of cow and the calf. Okay. Working notes. Let's start from here. Working notes. And this is my 1st October 2001, October 1st 2001, right? When this calf were born, okay. So what was the accounting entry? The accounting entry is biological asset, calf account debit, to other income, because there is no cost, right? To other income. And how many calf have born? 100 multiplied by what is the fair value less cost to sell, which is given in the question as 1100 rupees, right? 1100 rupees, 1,10,000. So other income will be credited as 1,10,000, right? I hope it is clear to everyone that what is this accounting entry? This is 1,10,000, right? And this is clear. On March 31st, 2002. Now, what is the value of this calf on March 31st, 2002? What is the value? On March 31st, 2002, this 1,100 rupees of calf. So here the value was, here the fair value was 1,100, right? The fair value was 1,100. But on 31st March 2002, this fair value will become 1,300. So what is the change? This fair value is 1,300. So what is the change? The fair value is 1,300. What is the change? The change is 200 rupees increase because the fair value of 6 months old cow on 31st March 2002 is 1300, right? So biological asset calf account debit to other income, which is fair value changes to other income, right? Which is my fair value changes, and my fair value changes is 200, which is equal to 1300 minus 1100. It is given in the question, multiply by 100. 20,000 is my fair value changes. 20,000 is my fair value changes, right? Clear? So 20,000 is my fair value changes. Is it clear? Is it clear, friends? And in the beginning, a government grant is also received. In the beginning, a government grant is also received. Government grant, right? So what is the accounting entry of government grant? This government grant was also received. So bank account debit, money has been received. So that is why bank account will be debited. Bank account debit. Sorry. Bank account debit to government grant other income. To government grant. To government grant other income. Credit. And what is the amount? 1 million. 1 million means 10 lakh. 1, 2, 3, 4, 5. Okay. 10 lakh. So friends, first of all, let's move to the P&L now. And in the P&L, on the income side, just recognize these two items. Okay. Income side. Income. What is the income? Income from newborn calf. What is the income from newborn calf? So when it was born, 1,10,000 was credited, and then subsequently on the reporting date, 20,000 has been credited due to the change in fair value. So 1,30,000 is income from newborn calf. Then government grant. What is the income from government grant? The income from the government grant is 10 lakh rupees, right? Because it is unconditional. It is 10 lakh rupees. I hope things are clear so far. I hope everything is clear so far. And in the balance sheet, this calf, 6 months old calf, has to be recognized at 1,30,000 rupees, 1,10,000 plus 20,000, of course, 1,300 rupees, right? 1,30,000 rupees. I hope things are clear so far. I hope things are clear so far. Yeah. Srinidhi, Sheena, Mahendra, Jay, Utkarsh, Megha. I hope everything is clear so far. Yeah. Is it clear, guys? Please let me know if it is clear. Yeah. So we have done the accounting of calf. We have done the accounting of cow. Okay. So we have done this calf accounting. We have done this government grant accounting. Now let's do the cow accounting, right? So April 1, 2001, right? April 1, 2001. The company has purchased the cow. So what was the value of the cow? So value of the cow on 1st April 2001 was 5,000 rupees per cow, right? 5,000 rupees per cow. And what was the number of cow? Number of cow was 200, right? So the company has purchased 200 cows. What is the closing value? What is the closing value? The closing value is 5,500 for 3-year-old cow. When it was purchased on 1st April, it was 2-year-old cow on an average. And after 1 year, that is on the reporting date, it becomes 3-year-old cow. And the closing value of the closing fair value less cost to sell of 3-year-old cow is given as 5,500 in the question. Right? Is it clear? It is given as 5,500 in the question. Right? So when this cow was purchased, so 5,000 rupees was fair value less cost to sell. It is given in the question. So what was the initial recognition? Initial recognition. So initial recognition was at fair value less cost to sell. So biological asset account debit, which is biological asset cow account debit, to bank, right? because the fair value less cost to sell is equivalent to the bank, right? So what is my amount? 5,000 multiplied by 200, right? Subsequent, that is on reporting date, 31st March 2002. 31st March 2002. Subsequently, what is the accounting entry? Biological asset cow account debit to bank, sorry, to other income. What is the price change? What is the change in the price? Equal to 5,500, equal to 5,500 minus 5,000 multiply by 200. Okay, multiply by 200. Clear? Clear? Is it clear? Yeah. And this 1 lakh will go to the P&L. Fair value change in cow. How much? 1 lakh rupees. Okay. And this value of the cow will recognize in the balance sheet. What is the value? This cow was purchased for 10 lakh rupees, and there is a fair value changes of 1 lakh rupees. So it has to be recognized at 11 lakh rupees. Is it clear so far? Any problem? Any doubt so far? Any problem? Any doubt? Yes, government grant is an income, Mahendra. Yeah. Any doubt? Any problem? Clear? Is it clear? There are some expenses also which is given in the question. In the question, some expenses are also given. Expense, right? What expenses are given? Do you remember the name of the expenses? Some maintenance expenses are given. Maintenance expenses. And the breeding fee was also given. Breeding fee. What is the maintenance expenses and breeding fee? 6 lakh rupee was maintenance expenses and 4 lakh rupees was the breeding fee, right? 6 lakh and 4 lakh. Six lakh and 4 lakh is the expenses. Now the last part is left, which is milk, right? So what is the accounting entry for the milk? So in the question it is given that there is an inventory which is lying for the milk. There is an unsold inventory for the milk, right? So there will be inventory as well. Inventory. So inventory for the milk, right? Now the closing value of the inventory is also given, which is let's put the journal entry here. So before becoming an inventory, this milk was agricultural produce, right? And what was the fair value less cost to sell of the agricultural produce? So what was the accounting entry for this milk? Agricultural produce, milk, account debit. And what was the value which is given? The value was given as fair value less cost to sell was 24 rupees, right? On 31st March 2002, this milk was taken out from the cow and this milk was unsold, right? So, and what was the amount of the milk which was there? 3,000 liter. So 3,000 liter multiplied by 24 rupees the fair value less cost to sell. To other income. To other income. And after that it will become an inventory. What is the second entry? The second entry is, so this entry is at the point of harvest. What is the second entry? The second entry is inventory milk account debit, inventory milk account debit to inventory milk account debit to agricultural produce, milk, right? This will be credited at the same value, right? So first of all, this will go to the P&L milk as a other income, 72,000. Second, this will go as an inventory. This milk will be there as an inventory. Okay. So if I talk about my balance sheet extracts, my total of the asset side is 50 lakh plus 11 plus 130 plus 72, 63,02,000. This is the total. This is the total, right? Okay. And when I talk about total income, when I say total income, my total income will be how much? My total income will be this one. And what will be my total expense? My total expense is 10 lakh, right? And what is the profit? What is my gain? What is my profit? Profit. What is my profit? My profit is income minus expense. 13 lakh 2,000 minus 10 lakh. 3 lakh 2,000 is my profit, right? So this is my profit, right? So this is the solution of this particular case study, which is there in the institute study material. And this is a comprehensive case study which touches all the concept of Ind AS 41, be it initial recognition, be it birth of a biological asset, be it a changes in subsequent changes in fair value, be it a conversion of agricultural produce to inventory, okay, be it a government grant, be it a land which is not an agriculture which is not an agricultural asset, right? So this standard has touches all the aspect of Ind AS 41. And I would request you that, of course, I will share this Excel file, and I would request you to please revise this particular case study, because this is a very good and comprehensive case study which touches all the concept of Ind AS 41. And let me know if you have any doubt in this particular case study, or if you have any doubt in any concept of Ind AS 41. Yes, Jay, change in price of calf and change in price of cow due to price change and physical change, both will go to the P&L. If question will specifically ask you that please elaborate or please state that price change and physical change separately, only then you have to show it separately. Otherwise, just you need to take what is my fair value, what is my price as on date versus what was the initial price. So the difference will go to the P&L, right straight away. Like in my case, in case of a calf, I have recognized at 1100 rupees, and then I have just compare with 1300 rupees, which was the value on 31st March, right? In the case of a cow, I have purchased a cow for 5,000 rupees, and the closing value of 3 years old cow is 5,500 rupees. Simply 5,500 minus 5,000. So the difference I have just credited to the P&L, right? I have not specifically, I have not shown what is price change, what is physical change, because question has not asked that, right? If question will ask, you need to see what is the like to like change. For example, if it was 2-year-old cow, what is the price for 2-year-old cow as of now? This is a price change. And what is the price change due to 2-year versus 3-year-old? This is a physical change, right? So I hope it is clear to everyone, friends. I hope this case study is clear to everyone. So the solution is also there. We have already covered this solution, right? And the working notes is also again explained in this particular example, in this particular case study, right? So disclosure I'll not cover. So disclosure is not important here, right? So friends, just quickly we will summarize and we'll recap. We have started the standard for biological asset and agricultural produce, right? So this standard covers your biological asset, agricultural produce, and government grant which is related to agricultural activity. Land will not cover here, right? Intangible asset will not cover here. Right of use asset will not cover here, right? So these will not come under the purview of this particular standard. Bearer plant is again come under Ind AS 16, will not come under Ind AS 41, and government grant related to bearer plant will also not come into the picture, right? So biological asset and agricultural produce at the point of harvest has to be taken into consideration from the purview of this standard, right? This biological asset and agricultural produce has to be recognized if future economic benefit is probable, cost or fair value can be measured reliably, and there is a control, right? The second one, biological asset and agricultural produce up to the point of harvest has to be measured initially at fair value less cost to sale, right? Subsequent recognition and measurement for agricultural produce will not come into play, right? Because once the produce is harvested, it will become an inventory or it will cover under other standard. But for biological asset, subsequently, if there is a change in the fair value of biological asset, this change will go to the P&L as well, right? And again, subsequently, it has to be measured at fair value less cost to sale. So fair value changes has to be recorded into the P&L. If the biological asset will give birth to another biological asset, that new born biological asset has to be recorded at fair value less cost to sell. And of course, the credit will be to other income. Remember these three cases, case 1, case 2, case 3, which I have shown on the Excel file, right? If I talk about government grant, if the biological asset is measured at fair value less cost to sell, only that government grant will come into Ind AS 41. If government grant is unconditional, so when the government grant will become certain, it has to be recognized in P&L. If the government grant is conditional, so it has to be recognized when the conditions will met, right? So we have discussed a lot of real life examples. We have discussed 4 or 5 case studies from institute study material. This is not a very bigger or very lengthy standard. This is short and sweet standard. You can expect 4 to 5 mark question from this particular standard. And of course, this is a kind of a standard where you have to put less efforts, and it is a very interesting standard, right? It talks about animal, it talks about plant. So you will be happy when you feel boring. When you will read this standard, you will feel happy. Okay, you will feel different. So that was there in this particular standard. Thank you so much. And let me know if you have any query relating to this standard. I will be of course, I am happy to solve those queries. And if you don't have any query, so I'll wait for another 5-10 another 30 seconds, and then I'll conclude the session. Sir, we were asked to show balance sheet and P&L. Yes, Sheena, that is why I have prepared the balance sheet and P&L. Sheena, can you please repeat your query? Sir, do we need to bifurcate each income and expense into its head in a P&L? Yes, Sheena, you have to, it will be a better presentation. Under the income and expense head, you have to bifurcate your income and expenses, right? And this was only a P&L extracts. Sheena, let me know if your queries have been unanswered, or participants, if any of your query is unanswered, I will be again I will again solve those queries. Sheena is asking, sir, it will not be a mismatch because the land is being used for 5 years and the benefit is taken, then also it is to be recognized after 5 years. Sheena, so basically you have to see from the government grant perspective, right? When we are using the land, of course, we are either land is not a depreciable asset, but of course we are looking at the impairment thing from the perspective of a land, right? But when I am looking from the government grant perspective, if my condition is 5 years, then how can I recognize before 5 years, right? If today I'll recognize and tomorrow I will not comply with the condition, after that I have to refund that government grant, right? So that is why the standard says that when it is conditional, so you have to recognize only when the conditions will be met. So that is a kind of a recognition criteria. Otherwise, it will not reflect a true picture. Instead of, even though the conditions have not been met and you are still recognizing the government grant. So that is not right. So that is why standard says that if it is conditional, you have to wait for the condition to met. And if it is unconditional, you have to wait for the government grant receipt to be certain, right? Any other queries, participant? Let me know if you have any other queries. Yeah, I'll wait for another 30 seconds. If you have any query, then please put your queries on the query link of ICAI. I will answer to those queries. If it is not there, then I will conclude the session in the next 30 seconds or 1 minute. Yeah. Jay is asking, sir, what if non-bearer plant dies? In that case, if you have recognized any asset, you have to de-recognize that asset, right? For example, you have recognized your biological asset at 1 lakh rupees, and you have just either you have purchased or you have recognized initially. For example, cow has given birth to a calf, okay, and you have recognized this calf at 1 lakh rupees. And for example, tomorrow the calf dies. In that case, you have to de-recognize. You have to recognize expense, and you have to credit this calf. Okay, you have to de-recognize the asset. As simple as that, right, Jay? When this biological asset, be it a non-bearer plant or be it a biological asset in terms of animal, if it dies, it has to be de-recognized, right? Sheena, I have told you that yes, you need to bifurcate P&L. J, milk will subsequently be measured as inventory, and inventory has to be recognized at cost or NRV, whichever is lower, right? If you have any query, you can write your query to ICAI, or you can write your query to me on caalokgarg@gmail.com. My email ID is caalokgarg@gmail.com, right? You can write to me as well, and my email ID is caalokgarg@gmail.com. caalokgarg@gmail.com. Okay. Yeah, thank you so much, participants, and thanks for making this session interactive. I hope you have understood this Ind AS 41 very well. Thank you so much for attending this session. Stay happy, stay healthy. Thank you so much. Bye bye. Take care.